All right, guys, good afternoon, everybody. Today is Monday, October 3rd. It is 2:01 right now. Our session is scheduled to start at 2 p.m. So I'll give a few minutes for people to make their way in. And then we'll get started with our mentoring session for today. So our main focus is basically going to be the K2 SR rejection because that's mainly what we're applying right now. If you guys have any specific questions regarding any of the other strategies, feel free to put them in the chat. I can help you with whatever you guys need help with. But let me just finish setting this up real quick, and then we will get started with the session shortly. So everything's set up right here. Let me get this link sent out to you guys here in the premium. It's good. There we go. All right, solid. So looks like we're pretty much good to go. I'll give it a few moments for people to make their way in. All right, so I'll give it a few more moments, guys. Let's see if there's anything else here that I need to look at. Looks like sentiment has dropped a bit. It's 59% long. So it's dropped quite a bit. It was like 70% this morning. So it's dropped a lot since then. Looking over here at the fundamentals, are currently very high. They're up 700 points, which is pretty crazy. It's a stock surge to kick off October and a new quarter as bond yields tumble. Dow closes up 760 points. I see this as straight manipulation up until Friday because it's NFP week. So we already know that news is not going to be good. So it's just going to keep getting propped up, and then, probably midweek or until Friday, it'll just dump right back down. So I'm looking for a correction right back below, obviously later this week. Hey, Kenny, how's it going? So good afternoon, everybody. Today is Monday, October 3rd. It is 2:03 right now. Our session is scheduled to start at 2 o'clock. So I'll get a few more minutes for people to make their way in. But just a reminder, this session is, unless we get any questions, this session is going to mainly focus on the K2SR rejection strategy. Just to show you guys some examples for today. We had one entry that we took today, but other than that, there's nothing else that we took. We only took one trade. Until the market confirms that we're actually moving very directional, we're going to keep trading this one strategy. Let me check the market for today to see how it moved. So basically from 8 to 10. Actually, it moved pretty smooth today. It did exactly what we typically anticipate during normal market conditions. So let me just clean this up over here a little bit. And I'm going to show you what I mean by that, because that's crazy. This zone over here was perfect. I drew the zone before we got off live at 8 o'clock, and then it literally just stayed within the middle the whole time. So I'll leave that up right there just to give you guys a, or actually I don't need to leave it up. I could create my own zone right there just to show you guys how price was ranging. All right, so this is typically what I've been trying to show you guys for some time now, because the market has not been moving directional. It's starting to actually move directional now because we are in the fall. But let me stretch this out over here, and I'll fix this as well. All right. So looking at this right here, you guys can see that the market did move pretty directional for today. So we had a fake out right here to the bottom. It established a low. And then from here, it was a continuation to the upside. Push up, retracement, further push up, consolidation, and closing out the session with a bullish direction for the entire day, pretty much, during our live session. So this is typically how the market's supposed to move. We have a direction for the entire day. from 8 to like about 10, price pretty much consolidates. It consolidated literally from 8 to 10. And then typically from 10 to 12, it'll either continue or it will reverse. So you can see right here, price kind of bounced above it, retested the consolidation area here, and then pushed up further. The mid-market reversal happened right here at 12. So you can see it established the top, and then it came back down. So this is exactly how the market should be moving post-summer. Directional push from 6 to 8. This is why we trade between 6 and 8. 8 to 10, you can see a lot of consolidation here. This is why we don't trade around this period. And then after 10, we have a continuation or mid-market reversal. If that mid-market reversal doesn't happen at between 10 and 12, it'll happen usually from 12 to close. So from here until close, price did come right back down. So, I mean, it played out perfect. Typical pattern, this is basically how the market moves during normal conditions, which are in the fall, spring, sometimes in the winter before we get to the holidays, and then slightly after. So in between early winter, late winter. This is how the market will typically move each day. Let's take a look at the 10-minute real quick. Let me just clean this up. I just want to, oops, wrong button. I want to see how it looked like over here for the daily, if there was a daily entry. So clean this up a little bit right here. Daily entry would have been right over here at 7 o'clock. So this was a daily entry right here. Straight to full TP, no drawdown for 1,500 pips. The daily right here hit for the 10-minute. Came at 7 o'clock. 5-minute over here, daily hit as well. And for the 3-minute, I was a bit iffy on this because it was an invalid signal. I don't think we would have taken it, or we would have just ignored it basically. I don't think we ever had the situation where there was an invalid entry like this, and then we still took it. I think we typically would just skip because this looks like it would have hit stop loss. It pulled down, faked out, and then it swung right back up just like it did for everything else. Daily entry for today on the 5-minute was bullish. Daily entry on the 10-minute normal daily entry was also bullish as well, because the pivots were indicating a bullish trend, plus the trend meter was green as well. So only for buys today. This one here was iffy because it was invalid. You probably would have to wait for the next one. So if you were to take this here, you probably would have skipped it, waited for the next one over here. But at that point, it's too late. It was already 8:30. So, all right, let's get to the question. So it's ran through the market right here to show you how the market was moving today. This was actually a pretty good direction. You know, we couldn't really anticipate this was going to play out because we were looking for a sell today. Well, not really a sell, but we were looking for price to come down because the sentiment was so high. However, the sentiment has dropped quite a bit. It's below 60%. So we might be shifting, but we'll see where the market takes us tomorrow. So first question over here is from Maria. Maria is asking, when a signal is given within a wide area, do we have to wait for it to leave the area, or can it be taken even if it closes within the area? So I'm a little confused with what your question is asking, Maria, because I'm not sure if you're talking about like a specific strategy. I mean, mainly you have to follow if the strategy requirements are met, right? So depending on what the strategy requires, that would be your answer right there, right? So the SR strategy you're asking. Okay, so applying this to the SR strategy, let me read your question again. You mentioned when a signal is given within a very wide area. So I don't think that has any relevance, right? Do you have an example for that, Maria? Because there's no requirement there where it says it has to be in a wide area or if it has to be in a tight area. What do you mean by wide area? Do you mean like it's in the middle of like the open, if it's close to a session or a zone, or if you could be a little more detailed with your question? I'm just trying to understand what you're trying to ask for here, because you're asking about a wide area. Do you mean a wide area where there's just no zones? Oh yeah. So if there's a huge zone, then it doesn't matter because it still fits the requirements, right? There's no requirement saying it has to be within a wide or tight area. If it's within a zone, it fits the requirements. So I think you might just be overcomplicating the strategy a little more because you might be a little worried that the zone's too big. But I mean, we can pull back yesterday. Let me see if I can find the zone. Do you remember what time was it during the live session or was it after? I can probably rewind to that day, or it wasn't yesterday. I think you were talking about Friday, right? Because yesterday was Sunday, so we didn't have a trade during that time. I guess I can rewind to over here to see if we can find that zone. It was around 8 o'clock, I think, because we weren't on the live anymore after that time. So think you might be talking about, yeah, I think this is the zone that you're talking about right here. This one. And it was a little overextended over here. Because these, yeah, this was a zone that you were talking about, because there was a lot of these that overlapped. So here's the zone that you were referring to yesterday. It doesn't matter if it's a big zone or a small zone. The requirements only require that you have, a candle wicking without a zone, wicking outside of a zone. So let me just clean this up a little bit here so you can see it a little bit better. And I'll go back to an entry that we did have, and I think we did take on that Friday, right? So we did take a trade that day. Let me just rewind it. I think it was this one right here. So it doesn't matter how big the zone is. If it's rejecting off the zone, that's the only requirement, right? So let me put everything up here real quick. Where are the requirements at? SR rejection, which is right here. So this is like basically what you have, and the big zone doesn't even fit under like the red flags, right? If it was under the red flags, then yeah, it'd be something that you look out for. But that doesn't necessarily mean anything, right? The only thing that matters is if the candle's too big. So whether it's in a big zone, small zone, micro zone, anything like that, as long as you have a wick rejection off it, it fits the requirements. First requirement here, identify a bottom wick rejection off K2SR with a moderate red candle, right? Or moderate green candle for a buy here. So we have a wick rejection off the structure. Second, you want to confirm you're trading the direction of trend. So looking at the trend meter down here, it's bullish. Pivots right here angling up. Green is over red. This is going to indicate that we're in a strong bullish trend. Third, you want to confirm that you're trading in the direction of momentum. So momentum candles right here. You're obviously trading bullish. And then you can enter right here. So the main thing that you'd be looking out for here, Maria, is whether the candle's too big, right? So candle's not too big and it's criteria and hits TP. Let me go and check your question again. So you have another question here. You said your question is if the candle closes within the zone. Yeah, so I think again, you're kind of just you're kind of overcomplicating it, right? Because you're basically making up your own requirement. So you're asking if it closes within the zone. It doesn't matter. If it closes within the zone, outside the zone, you don't care where it closes. The candle doesn't matter at all. What matters to you is the wick, right? So focus on the wick here. Don't focus on the candle. The only reason you're focusing on the candle here is if the wick on top's too big, right? That's going to fit the requirement whether it's a moderate candle. So the candle doesn't matter. Only if you're looking for a top wick. So for example, right here, this is when you would care about the candle, right? Because the wick on top's too big. So try not to confuse yourself with that, because I could kind of see where you're let me see. So you have another question over here. Suppose this candle closes in the middle of zone. Is it valid? Yes, it's valid, because there's no requirement telling you that it can't close within it, right? What I'd recommend is to just follow the requirements, right? Because I feel like, well, I can kind of see what you're getting at. Like in your head, you're kind of thinking, okay, if it's within the zone, I should probably not take the trade. But in reality, it doesn't matter, right? Because it's not one of the requirements. So I'll see if I could find a requirement here that fits your criteria. But okay, so here's one over here. This is a perfect example. This is exactly what you were talking about. So let me go over here to this candle over here. Both of these actually. So this is the example that you're talking about, right? The rejection is within the zone, and it's still within the zone. So right here, you can see that it doesn't matter at all. All requirements are met. You take this for a buy. You let that trade run, full TP. Another example right next to it. So this one again right here, same example that you just referred to. You have a wick rejection within the structure. The candle's still within the structure, doesn't matter. You take a trade there, you let it run, full TP. Does that make sense, Maria? Okay, perfect. Yeah. So yeah, my recommendation is just like, and it's not just you, it's just a lot of people try to add different requirements to the strategies, which is fine. If it works for you and it's something that you feel should be added, then great. But one thing to look back at is just look at the requirements. If it's not part of the requirements, then it's nothing to worry about. The thing with these trades here is that you don't want to add too many requirements, because if you add too many, you're not going to take any trade, right? Like you would have skipped these trades here if you would have, if that would have been a requirement, even though it would have been a perfect entry. So the main thing would just stay at a bare basic. If you're starting to lose trades, then yeah, maybe you should figure out if there's something else that should be added. But for the most part, typically there's nothing that needs to be added because we've tested it enough where we know that these are the very set in place requirements that you would need. So this one right here. Let's see, question from Pat. Pat's asking, out of curiosity, does the next candle hit TP on the high-low scalp? Let's see. There's a high-low scalp right here. This is that. It did. Yeah, Patrick. So it actually did hit right there. Yeah, exactly. Yeah, Patrick said, yeah, punches and bunches. So typically, whenever you guys see one entry here, like I went over this example for Maria, when you see one entry here, there's actually a lot of entries that came up. It's like what Patrick just mentioned. It's punches and bunches. So like a lot of these trades come up right after each other. We have one right here, which is a pivot scalp entry, right? Because we have price above the pivots, valid bullish momentum signal. This would be a buy right there for a pivot scalp. Right after it would be Maria's example right here. And basically a K2SR rejection within a zone. That would be another win right there. Another one right here, Patrick just mentioned, high-low scalp. So basically 3 different strategies followed up back to back, and they fit all of the requirements and criteria. And then also again below here, basically a pivot scalp. I mean, not pivot scalp, but variation V1 or even a V3. I think it's too big though. Yeah, stop loss would have been too wide, but it's another example of a variation right there. This is basically where the drop started. So it looks like the drop started right, or not the drop, but the push to the upside started down here. You guys can see price was starting to swing up. Actually, it started way down here. So there is a variation V1 right here. Price pushed up. It's a double body rejection. Price came back down for the retest. Variation V3. Price pushed up further, pivot scalp, SR rejection, and then a high-low scalp. So there's basically 1, 2, 3, 4, 5 trades back to back right here within a short period of time. So this is why sometimes when you guys are looking for these trades during the morning session, whenever you have like one valid entry and it hits, you should probably look for another entry because they typically come right after each other. It's a big momentum push. Like for example, whenever we're on the live session, I'm looking for these reversals. I'm basically looking for these V1s, not necessarily for entry, but I'm looking for price to swing in that direction so that we can look for another entry. So like, for example, if we saw these 2 V variations right here, we could have waited for the SR rejection at some point up here. And then we could have, took this one. We would have skipped out. We would have missed like 3 trades here because there would have been a win, win, win. But on this 4th one right here, which was a K2SR rejection that we were actually looking for, it would have hit full TP as well. Right there. So, I mean, it's definitely important that you guys are paying attention during the entire live session because I know some people just doze off, right? I know you guys sometimes get bored. I know it's harder if you guys don't have the indicators because you guys can't analyze it yourself, but if you guys do have the indicators, it's always good to continue looking for trades, calling them out, and then I can either agree with your analysis or I can correct it if there's something that needs to be changed or something else that needs to be looked at. Yeah, Patrick said first one was iffy with the blue trend meter and red pivot over green, but it worked. Yeah, exactly. This one right here. Or are you talking about? Yeah, I think you're talking about this right here, the pivot scalp, right? And even this one right here, and this one right here too. Yeah, the pivot. Yeah, it was a little iffy because the trend meter was blue, so this wouldn't be a K2SR rejection. It would just be a pivot scalp, but a risky one because the trend here hasn't shifted yet. But on the following candle, it did confirm. And I forgot what trade we took, but we did take a trade on Friday, I believe. Yeah, we did actually. It was that same one right here. We actually missed this one. So I remember this one during the live session. We were like talking and I was analyzing something and I looked back and I was like, damn, we missed this trade. So we actually did miss this one. We did take the one at 8 o'clock though. So it was a little bit after. The one that we took was actually like way down here. Yeah, it was this one right here. So this was the one that we actually took. The one at 805 right here. So we took this one right there. Is that the one we took? Yeah, we waited for it to retrace or something, and we took it like a super late entry. I know it was a risky entry, but we waited for it to pull back. As it pulled back up, we ended up taking it. That's one that we took on Friday for the full TP. Yeah, so let me see the other question, Maria, if there's anything else that you were asking. I think you had another. Okay, you had another question regarding Maria's asking if I can explain the daily entries I saw today in the 3-minute and 5-minute. So yeah, let me check that for you real quick. So if you guys have any other questions regarding the SR strategy, just put your questions in the chat. I can answer whatever you guys need help with. But for right now, I'm going to go over the 3-minute and 5-minute daily that Maria is asking about. So going over here on the 3-minute, or here's the 5-minute. Let me just delete that. And 3-minute. So this 3-minute wasn't an actual entry. So let me go over here real quick and replay it. It was, I mean, either of them wouldn't apply. So let me go over here. I'll go to this one first, and I'll put the requirements here for the 3-minute daily. So for the 3-minute daily strategy, counter trend confluence, right here, you're looking for an entry after 6:30 a.m. 6:30 a.m. is right here. So you look for the first entry after this time. So after 6:30, you're looking for the first K2 momentum signal. This would be the momentum signal right here, but it doesn't meet the requirements because you're looking to confirm that it's opposite of the trend meter, right? They're both green. So with that said, we don't have an entry here applying the counter trend. If you're applying the actual 3-minute daily, you have to look for a valid K2 momentum signal. So this is the difference between the actual daily and the counter trend. So for the counter trend, you're looking for this to be opposite. It's not opposite here because they're both green. And for the actual daily, you're looking for a valid K2 momentum signal. This isn't valid here, so none of these apply. Going over here to the next entry, or not entry, but the next momentum candle. There was another momentum candle right here, but this still doesn't fit the requirements, right? So there was no entry here for the 3-minute because it doesn't align with the trend meter. This is opposite, and this one over here didn't apply. So you would have just skipped 3-minute. Going to the 5-minute over here, this one actually fit their criteria. So let's go back to this candle right here at 7:05. And I'm going to put up the requirements here again for the daily. So for the, I don't have the requirements here for the 5-minute, but it's the same thing. The only difference is the TP stop loss. So I'm just going to put the daily again right here for the 3-minute. It's literally the same thing. It's just for the fixed TP stop loss, instead of 300, it's 500. So you're looking for an entry after New York Stock Exchange open at 6:30 a.m. So 6:30 is going to be right here. You're looking for the first valid momentum signal. Going forward, this is going to be your first momentum signal right here, this bullish candle. And then you want to confirm that it's matching the trend meter. So this is a valid green momentum signal. The trend meter down here is green. After that, you can enter on the open of the following candle, which should be right here. This one would have been skipped as well because the candle is too big, right? You're going for a 500 pip TP. If price retraces even a little bit, it'll stop you out before you hit your TP. So you wouldn't have taken this trade here. The red flags apply for all strategies. So not just the K2SR, but you're looking at all the strategies. So you still avoid trades whenever they're your sessions. You avoid trades whenever they're your opening price, news price. If the candle prior entry is too large, this right here is obviously too large. So if you would like to enter this, you'd have to wait for it to retrace back a little bit and then make the entry. So if we push this forward a little bit, you can see that there was little to no retracement, but it did hit full TP. So does this make sense, Maria? I just want to make sure that you understand the daily entries. It's basically the same thing as a 10-minute. It's just the TP stop losses are different because of the obvious, time difference. 10 minutes or bigger, so you're going for about 1,500 pips. For the 5-minute time frame, you're going for 500 pips, and for the 3-minute time frame, you're going for 300 pips. So it's basically the same thing per time frame, but it's just a different TP stop loss. But I never apply the 5-minute. We just look at it, but I don't typically apply it. What we usually do is we'll use this as a guideline. So say, for example, we get a buy entry here, right? I don't typically take the buy entry here. I look on the 1 minute because we already have a buy trade running. And then from there, I will follow up with other positions. So typically right here, we had that buy signal come up at 7 o'clock, right? So let me just rewind it to 7 o'clock over here and see if we had any buy entries at the same time. So let me turn on the SRs. There was actually no SR entry there. This right here would have been a pivot scalp entry because we have a valid buy signal above the pivots. So this would technically be a pivot scalp entry. Obviously, we wouldn't take it because the candle's too big. But this would fit the criteria. If this was a valid entry with no red flags, this is one that I would take. So I would use the 5-minute to just identify, okay, we have a buy entry running. So what am I looking for? I'm looking for a buy here. So if we had a buy here and the candle wasn't that big, I would have taken it. And this is why you wouldn't take it, because you can see right here where I hit stop loss and it shot right back up because the candle here is just too big. So that's how I would use it, Maria. I don't necessarily take this and just like set and forget it, which you can do, but I don't typically do it myself because the market's just too erratic, candle's too big. I'd be worried that I'd hit my stop loss before it actually came up and hit my CP. And that's basically what happened here because the candle's just too big. This was also a news candle, so we would have skipped it anyways. I think that was the main reason why we avoided it, because the news candle right here at 7 was negative news and it just shot up about 1,300 pips. So that's basically how the strategy works. If there's anything that you're confused about regarding it, just let me know so I can go more in detail. But for the most part, it's pretty much self-explanatory. You're just looking for the first valid K2 momentum signal. You're confirming the overall trend or overall bias, long-term and short-term, and then you would take the trade. So for this one right here would fit the criteria because we had a bullish bias with regard to fundamentals and technicals right here. The only thing that didn't line up with it would be the sentiment, because sentiment was indicating a bearish buy, a bearish entry. But it was pretty much neutral at that point because fundamentals were up like 500 points plus the trend meter here was bullish. The only difference was that the retail sentiment was indicating a sell. But as you can see right here, it did weaken. It went from 70% to 59% in about one session, which is a huge drop. So yeah, if there's any other questions, feel free to put your questions in the chat. Otherwise, I'll keep going over examples for the K2SR rejection strategy. I think that's the main thing that most people have questions about because that's the main strategy that we're applying right now. So if there's anything you guys need me to emphasize, focus on, explain, go ahead and drop whatever questions you guys have. Otherwise, I'll keep going over examples for the K2SR rejection today. I know some of you guys were looking to take these strategies post live session. I didn't trade after the live today. I just pretty much called it a day because of the market conditions. But we'll see if we can find one here. So I don't see any over here. Basically nothing from like 11 to 12. Go back a little further over here. Nothing here either. Let's go back a little further. So basically from 11 to 12, there's no entries. From 10 to I'm just looking over here. It looks like there's one right here. Fit criteria? Yeah, it does. Okay, so let me go ahead and just clean this up right here. Draw the zone, turn this off. So there's one entry right here. As you guys can see, there's a wick rejection off this K2SR zone. Trend meter down here is green. Pivots over here are bearish, but they're starting to shift over to a bullish bias. You can see how they're kind of going sideways, but you can see the green is starting to cross over from the red right here. Price continues to push it up further. So with that said, we have all the requirements met here for a K2SR rejection. And I'll go over them again right here just to confirm everything. I just want to keep reiterating these requirements, guys, so that you guys can pretty much get this drilled into your brain so that you guys don't have to really think about it. So for me right here, I didn't have to think about it. I just saw wick rejection, trend meter was green, pivots wrangling up, green momentum right here. I already knew what to look for. But going by these requirements one by one, first requirement, identify a bottom wick rejection. We have one right there with a moderate green candle. The way to identify whether it's moderate is to measure the wick. So the wick right here is 1 point, which is 10 pips. In order to confirm if it's moderate, you just need to measure the body as well and make sure that it's bigger than the top wick. So the body is 5 points, which is 50 pips. The wick is 1 point. So it's obviously moderate right here. Requirement one's been met. Bottom wick rejection, moderate green candle. Second requirement, confirm your trading in the direction of the trend. The trend meter down here is green, so this indicates that it's in a bullish trend. Prices above the pivots. Pivots are starting to angle to the upside, and the green pivot right here is about to cross the red. So with that said, we are trading in the direction of the trend. Third requirement, you want to confirm that you're trading in the direction of momentum. You look back to the most recent momentum signal right here, and you can see that we have a bullish momentum. So with that said, we have all the requirements met. You enter this for a long position right here. TP set to 100 pips, stop loss is set to 300 pips. We only do that for a cushion in case price needs to retrace a little bit. But once you let the trade run, you can see where it traces slightly, a little further, and it comes right back up and blasts right through your TP. So that's one entry that came up at, let's see, 10:05, 10:06 a.m. So like 2 hours after the live session. I was already way off the live at that point, so not one that I would take myself, but not one that I did take myself, but if I did see this and pretty much everything lined up, I would have taken it. Let's go back a little further and see if there's any other entries for today. And I think this is just good practice so that you guys can know what to look for, right? If you guys are looking for these entries, I think the more examples I show you guys, the better you guys will be at identifying these entries here. So here's an entry where there wouldn't be one that you take. I want to show you guys good examples and bad examples. So for this one right here, I can see some people maybe getting confused with this because they might think that there's a zone right here, but realistically, there's no zone there. There's a zone up here. And this is why it's important that you guys draw the zone so that you guys can actually see this. And there's no zone right here. I mean, there's a small zone, but it's not really noticeable at all. So it's extremely small. Turn this off right here. And this is an example of where someone would get confused. And I only know that because I've seen other people in the past get confused with these types of entries here. So there's no entry here, but there's actually entry at this previous candle. So you might think that there's a zone here, but there's really no zone. So there's no no wick rejection off any structure. So you would not take that trade there. But the one right before it is actually an entry. So this zone right here is irrelevant. There's actually a zone down here though that is relevant. So this is why it's important for you guys to go and draw these zones. And if you guys are not familiar with being able to draw these zones on your own, all you have to do is turn on your K2SR indicator. So I'll turn this off real quick. And this is something it's something that you should be practicing anyways, just to make sure that you guys are quick with identifying the high lows, or not necessarily the high lows, but the K2SR rejections right away. Because sometimes you'll have no zones drawn up, right? And you're a bit confused as to like where these zones are. What you can do here is you can just see where price is currently at. You can see prices in this area. You don't care about the zone over here, right? Like these zones up here don't matter to you. Like this doesn't matter. This doesn't matter. These don't matter. And this last one down here doesn't matter either because price is right here in the middle. So the only zones that you really care about are the ones right here in the middle, right? What you would do is since you see prices right here, all you need to do is click the rectangle tool, go to the magnet tool right here, draw a zone right there, draw another zone right there, and turn off the indicator to clean it up. Once you have all these drawn up right here, you can start looking for certain entries. So turn on the momentum indicator, the ones that are required, and the pivots. That's basically all you need: momentum, pivots, and trend meter. So I'm gonna clean this up right here because these zones are relevant. You look at this right here. Same requirements for the K2SR. Identify a bottom wick rejection off structure. We have one right here with a moderate green candle. Again, if you want to measure the wick, you can do that. The more that you guys practice at doing this, the easier it'll be for you guys to spot this, and you won't have to actually measure it. Like here's 500 pips for the, or 50 pips for the wick. The body of the candle is 100 pips. So with that said, this is double the size. Requirements are met there. Bottom wick rejection, moderate green candle, trend meter is green, pivots are angling up. You're starting to switch to the upside. Momentum here is green as well. Enter the long position right here. TP is 100 pips, stop loss 300 pips. You let that trade run, and full TP on that next candle right there. So those are a couple examples of entries that came up today. See if I can find anything else here. But yeah, if you guys have any questions or you're still confused with any of these requirements, just put your question in the chat and I'll clarify it for you guys so that you guys are not confused with it. And it'll be easier for you guys to, spot these entries. So let me clean this up 1 second. Kenny said, hey guys, I have to go to my regular job. See y'all in the live tomorrow morning. Definitely, Kenny, we'll see you here tomorrow. So I think that's it for those examples right there. Let me see if I can find another one. So there's nothing here. Wick is 90 pips. Body is 100 pips. So this one is a little iffy. I mean, this still actually, no, never mind. It wouldn't be it wouldn't meet criteria because the trend meter is red right there. So I couldn't take that trade there. There's actually one right here. I'll have to see if the body or if the wick is, yeah, it is. Okay, so it does fit the criteria here. So going back, just looking back at the pretty much the entries that came up after the live session, there was actually a lot of entries that came up after. So we got off at 8 o'clock. We took one entry, but it looks like between like 8 and 12, there was like about 4 or 5 entries that came up. So if you guys were still on looking for entries, looks like you guys could have made profit off this. Not that I necessarily recommend you guys do it because market's been moving funky after the live, but if the market starts to move directional, by all means, you guys can go ahead and keep looking for entries here. But anyways, back to the criteria right here. So wick rejection off structure, moderate red candle. You can see there's no wick on the bottom. Momentum here is bearish with the sell signal. Trend meter is red. Pivots are angling down. The red pivot starting to shift over the green pivot. You enter this for a short position. TP is 100 pips. Stop loss is 300 pips. You let the trade run. Full TP. So not bad at all. There's actually another one right here too. So there's one right here, full TP. And there's another one right here. So it looks like all of the entries that came up after the live session today actually all hit. So again, right here, same criteria. This right here doesn't look like it'd be an entry. The wick on here looks too big. It's about 100 pips. Body is 80 pips. So definitely this one does not fit the criteria, but this one over here does. Looking at this again, wick rejection off structure, moderate red candle, sell signal right here. Trend meter is red, pivots are angling down, about to shift over. Have the setup right there. You let the trade run and full TP off the next candle. So looking at all the examples here after the live session, there was about 4 or 5 entries and they all hit full TP. Let me see if there's anything else over here. So, I mean, if you guys want to try your luck and trade, post live session, I mean, you guys are more than welcome. I just find it to be very risky because you can see right here, there's another entry that came up, it looks like, but this one actually looks like it would have lost. Actually, no, it actually won. Take that back, guys. But still, you guys should still take these trades with, a grain of salt because you guys want to be careful when you guys are taking these entries and not just like blindly taking entries because you see them come up. So there's actually 2 that came up right after each other. There's one right here. All right, so let me go over here real quick. Wick rejection off the structure. It's a moderate red candle. Obviously, wick on the bottom is very small. Candle body's big. The candle's not too big. You can see the stop loss is still past it. Sell momentum right here. Trend meter is red. Pivots are starting to angle down. You take this trade here, full TP, right? So that's one entry right there, full TP. Another one right next to it. This candle right here as well is rejecting off this lower zone. So wick rejection off structure, moderate red candle, same pattern right here. And as you can see, they came in bunches. So this could be a pivot scalp entry. While this was a K2SR rejection, another K2SR rejection, trend meter is red. Pivots are starting to angle down, sell momentum right there, all criteria met. This one looks like it might have been a little close. So depending on your spread, if the spread was too wide, you entered late, you might have gotten in at a bad position, but prices pull back a little bit. It's really close to the stop loss, but then it corrects right back down and goes straight to full TP. So yeah, looking at these entries here, there's actually a lot of entries here that hit. Yeah, so that hit full TP. This one over here looks like it would have hit stop loss. So not all trades that come up after 8 are going to be good trades, right? Let me check this real quick over here. And this is why I typically don't like trading after 8. If I do trade, it'll probably be after 10. So I'll probably go take a break, come back, fresh mind, and then I'll start looking for entries again right here. So it looks like actually, so the wick on top is about 30 pips. The body, this is too close. So if it's only off by like a pip or so, it's not going to be a moderate candle. So this one actually would have been skipped because the wick on top is basically the same size as the body. It doesn't classify as a moderate candle. So I take that back. That wouldn't have been a loss because you wouldn't have taken that trade there. Let me see if there's anything else here. Okay, so this one over here looks like it would have been a loss. Yeah, it doesn't reach full TP. Let me just rewind it a little bit. And again, this is just another reason why I would be very careful about trading after 8. Yeah, of course, there were like maybe, 5-8 wins after, but after 8 o'clock, this is usually where the market starts to get a bit iffy because market goes into a heavy consolidation. So there's actually one entry, not this one. The candle wick's too big on top, 50 pips. Yeah, it doesn't fit the criteria. This one right here looks like it does fit the criteria, but it is after 8. So 8 o'clock is right there. This came up at about 8:16, 8:17. I don't know if there was news around that time. No, doesn't look like it. There was nothing around 8 o'clock today. Actually, the Fed was speaking. So we had the Fed speaking, and there was also a 6-month bond auction or bill auction, 3-month bill auction at 8:30. This entry came up right before it. So, I mean, there was still something in the market that was going on that could have caused this to reverse. But this is, again, another reason why I don't trade after 8, because it's just not a good time to trade. You can see here from 6 to 8, market was pretty solid. I mean, we didn't really have too many entries because of the zones. There was no zones around our area, but trading from 6 to 8 was not that bad. If we were to continue, riding this up, which we could have, we just weren't comfortable with it today because it is Monday. So price came down, and then from here, you could have basically taken any buy as price continued to move up, and you would have been perfectly fine. Any buy using any of the strategies. But yeah, just back to this example again right here. I wouldn't have taken this because it's after 8, and it looks like it would have been a loss. So good reason to avoid it. Yeah, straight to stop loss. Another reason I would skip this too. So I'm trying to help you guys understand like why I don't take trades after 8. The reason why I don't take trades after 8 is because this is typically where the market starts to consolidate. As I showed you earlier over here, let me show you again real quick. And let me just check off all the indicators here so that you guys can see how the market moves between periods, right? So like, for example, right here, this whole area right here, 6:30 a.m. to 8 a.m. live trading time, live trading session. Market typically. So this is why I only trade during 6:30 to 8, because market moves directional. Typically, it's going to move directional. So like, for example, here, price came down first for a fake out. And then ever since it pushed up from here, it just kept pushing up, right? I typically don't trade from 8 to 10. Like if I do trade again after the live session, it's going to be from like 10 to 11 or something like that. So here we go, 8 o'clock. To 10 a.m. Market typically ranges, consolidates. So it's pretty obvious here, right? 6:30 to 8, price move directional to the upside. 6:30 to 10, or sorry, 8 to 10, market pretty much just consolidates sideways, right? Huge area of consolidation right here. And then this is typically where I'll come back. So I'll usually trade until 8. I'll do some stuff between 8 and 10, come back around 10, before I leave for the gym or something like that. And I'll take like maybe 1 or 2 trades. So you can see from right here, directional, consolidation, and then again right here, directional. Usually from, and these are normal market conditions, 10 a.m. to 12 p.m. Market tends to continue or reverse. And then you can see right here, price breaks above the zone, breaks above right here, and retests, right? Price breaks above, retests, then continues up higher. And if you guys have been part of K2 for a while, you already know that like once it hits 12, like usually around 11 or 12, this is typically where p.m. to US session close, market tends to reverse, aka mid market reversal. And this is usually how normal market conditions work. So this is why I trade from 6:30 to 8, because we have a directional push. We can catch at least a couple trades here and hit our full TPs. 8 to 10, market typically ranges or consolidates. It's here, clear consolidation. And then you can see from right here, from 10 to 12, continuation, 12 to session close, which is right here, obviously. Mid-market reversal. So this is where we trade. This is where I avoid. If I come back for maybe 1 or 2 trades, I'll come back around here 10 o'clock, maybe lock in 1 or 2 trades, go to the gym, come back. Sometimes I'll take a mid-market reversal if the market's really starting to reverse, and then from there, market flows. So this is generally how the market conditions move during regular conditions. This is like not summer, it's typically fall, spring, and early or late winter. And this is why I would only trade between here. Take a break, come back, and then sometimes mid-market reversal. Let me check the 10 minutes to see if there was a mid-market reversal entry. So it looks like it did come up right here. I don't trade it this way, but we have traded like this in the past, where the mid-market reversal comes up right here after 12. And it looks like it would still be running. We typically want to go for something smaller like 750. And it would have hit right there. So yeah, I mean, depending on how long you guys have been part of K2 or Kodi Kai trades, it's these strategies are going to start to work again as soon as the market starts to move directional, which looks like it's starting to happen today, but we'll see if it continues tomorrow. I don't want to get my hopes up and then expect that the market's going to start to move really well, and then it comes tomorrow and then the market's back to moving flat and it's just ranging. So that's I think that's pretty much it that I have on the session for today. If you guys have any other questions, feel free to put them in the chat. All right, Fahad's got to go, so I'll see you tomorrow, Fahad, on the live session. If there's any other questions, feel free to put your questions in the chat. If there's anything else that you want me to review, just drop your questions. I'm here to help you guys out, whatever you guys are confused with. If there's anything that you guys are still confused or still need some fine tuning on, I can help you with that. But until the market starts to move very directional, we're going to stick to the K2SR rejection. So until then, I'm going to keep drilling down on that strategy because I feel like that strategy can be used all year round. It just requires a lot of patience, right? So like maybe I can do something where I can go super far back and just show you guys one more example of an SR rejection during just a random period. I just want to go back to like some random period of time. Let's see. Okay, like right here, September 11. Just to show you guys how well the strategy still works during even random conditions. So I don't see any entries here. No buys, no sells. How big is this candle? I think this candle is too big. Actually, this isn't even New York session. I would only apply this during New York. Sometimes during Asia, if the spread's super low, but that doesn't happen too often. So this was like New York session on September 9th. I don't really see any entries here. Just one right here, possibly. Yeah, so here's one example right here. I don't know if there was any news this day there, so it's a little hard for me to show you guys anything specific because I can't exactly remember how the day was moving or the specific trading day. But here's an example of it right here. Wick rejection off the structure. Moderate green candle, trend meter is red, or sorry, trend meter is green. Bullish momentum right here. Entry point right there. TP stop loss, set up, let that run, and full TP. I don't know if we took a trade that day. I'd probably go back to September 9th. Oh, sorry, this is after the live, so I didn't take this trade, obviously, at 10:30. But we did take a trade that day, September 9th, right here. We take a sell and hit full TP. So, all right, guys, I think that's it for the session. Unless you guys have any other questions, feel free to put your questions in the chat. Otherwise, always feel free to email me or message me on Telegram. My goal here is to make sure that you guys become the best trader you guys can possibly be. So unless there's any other questions, we'll wrap this up. Don't worry if your questions didn't get answered. We're going to do this again next week. I'm going to go back to the regular schedule. So every Monday, 2 o'clock, we'll have the mentoring session. I'll drill down on these K2SR rejection entries so that you guys can master them. And then once the market starts to pick back up and move directional, we'll go back to reviewing the variations, the daily entries, the pivot scalps, intraday entries, etc. And I'll probably even try to look at some intraday and swing trades just for the other traders who want those types of entries. Just to remind them, strategies still work perfectly fine. You guys can apply the variations if you like, but just from my own experience, it doesn't work very well during ranging conditions. Like you'll get a lot of good entries, but you'll also get a handful of bad entries unless you don't fit all of their trades within the specific criteria for applying it during those conditions. So other than that, no problem. Glad I could help you, Maria, Patrick, Jonathan, and I'll see you guys here tomorrow for the next live.